That's the latest that we've got from the telecom world. Dipan Mehta, the director of Elixir Equities, is now with us on the show. Dipan, any thoughts on the telecom names? Everyone's watching for when the price hike is going to come through. But your thoughts on the subscriber picture and expectations of a price hike?
Karima, good afternoon and thank you for having me on your show. You hit the nail on the head. I think subscriber growth is all right, but the real alpha will come when they start to increase their pricing. And in a way, it is happening in the kind of plans which these companies are coming out with month after month. You can see that they are inching up in terms of the yield or the ARPU that they can extract from the customer. And it'll be visible in the earnings for December quarter and the later quarters as well. But all I can say is that consolidation is now going to start finally favoring the existing players. And I've always been very positive on Bharti Airtel since it's the only standalone telecom player that you can buy. When you buy Reliance, you're buying into a conglomerate of businesses. But nonetheless, I think telecom is a big part of Reliance Industries as well. And that also could add value to the company per se. But very positive on the news flow. And I think that these businesses have great operating leverage. Demand for data is increasing significantly. I just heard you on the show saying that the number of people who watched the finals that just showed the surge in data. So generally positive on telecom, and Bharti Airtel and Reliance should be part of your core holdings.
Dipan, hi. Just put up two names. One is GIC RE, which is the reinsurer, the government reinsurer. What a move it's been having. Last 2 days, basically. It's moved up substantially. Let me just tell you. On the 14th of this month, this is basically last Wednesday, right? I mean, 3 sessions back, it was 150 rupees, 190. I mean, just a ferocious move on GICRE. The high, of course, is the listing day. I mean, the day of the listing, which is in October of 2017. It made a high of 450 and spent a lot of time around the 120, 130 levels and is now at 190. So that's a big move today, 14%. The other is New India Assurance, which is also, it's a government general insurer, which has also been a huge laggard. But again, I mean, from 90-ish kind of levels, actually even lower, 85 kind of levels where it spent some time, very quickly, in I think a fortnight or so, it's up to 135, 136. Dipan, any thoughts, these two names? Both from the insurance space. Both PSU names, one a general reinsurer, and the other is a general insurer.
Good afternoon, Prashant. I think, this entire theme of investing in PSUs, now that is flowing into insurance companies as well. And I can pretty certainly bet that next few weeks or days, you could see an LIC coming into the limelight. All these insurance companies, they have underperformed big time. And maybe it's partly to do with the fact that their earnings have been extremely volatile. If you see GICRE or New India for that matter, there is no single line trajectory of earnings improving quarter after quarter, year after year. And they haven't really created value in terms of sustainable earnings momentum, which is what the street likes to see in companies they want to invest in the long term. But these companies are definitely cheap, perhaps available below their enterprise value or book value, or having also giving very good dividend yields as well. So maybe you are seeing some value buying taking place over there, as we have seen in PSU banks and we have seen in the PSU defense companies and so many other PSU names as well. So that trend may be playing out over here, and these are typically trading bets. These stocks can easily go by 25-30% higher from here. But when they start to stagnate, when the bad news starts to come through in terms of their earnings not being up to street expectations, that's when you feel that these companies start to underperform. So I think next few months or quarters looks great for every PSU company. It's like a mean reversion. They were putting so much cheaper, so much well below their averages and compared to other peer group private companies that they're just about playing some catch up over there. And that's where the opportunity is.
Okay, all right. Dipan, I wanted to ask you about a couple of these housing finance companies. Well, we had a big deal last week with regard to Poonawalla, the housing finance arm out there, which got valued at around 3.5 times price to book. But a couple of these other names are buzzing quite a bit. And valuation-wise, they're much cheaper. Indiabulls Housing Finance. The stock is higher even in today's trading session. It's been a rank underperformer, mind you, from the peak. But that's shown some traction in the last 1 month or so. The other one is Canfin Homes, again, which is buzzing. And PNB Housing Finance as well. From the housing finance space, which one do you prefer?
See, Nigel, all the laggards are coming into play over here because what is happening is that the good quality, outstanding businesses are trading at reasonable to slightly higher PE multiples. And instead of buying an HDFC, then investors want to go down the line into Canfin Homes and India Bulls Finance, and some of the other NBFCs as well. And that's perfectly fine. In fact, when the markets are in a bullish phase or bullish zone as we are just now, typically these weaker businesses tier two companies tend to do much better. The base effect favors them, and there's always a scope for P multiples to get re-rated. And as I said, I think as was the case for the insurance companies, that these are great trading opportunities, and investors should take advantage of them. Canfin Homes had been battered completely when the CEO resigned, but there was no adverse development thereafter. So it's just about playing catch up from the extremely low valuations. And mind you, it's a good company. It handled itself really well when there was an NBFC crisis post ILFS. So for all the housing finance companies, I would feel that Canfin Homes can offer a very good return. It's the risk return profile is certainly very positive for Canfin Homes. India Bulls, I think, has made its move, and yes, it may be a bit more of a trading play over there, but it's had its issues in terms of managing growth and NPAs in the past. So I would have much more comfort going with Canfin Homes. But I think, from a longer term perspective, it's best to be with the larger companies, Bajaj Finance and HDFC per se, which have displayed exceptional growth and created huge value over the past 4 or 5 years or so.
Dipan, thank you very much for joining in. By the way, it's picked up some more for the markets now. We were up 100 points at 230, and now we're up 123 points. Adani Group stocks like Adani Ports, Adani Enterprises at